What's your outlook for the next second half of the year? And will China hit that around 5% GDP growth target in your view?
So, Sam, there are a lot of warning signs flashing red or pretty close to red. There hasn't been much good news in this latest round of data, and this has been the pattern for the last few months. Both the long-term issues related to property prices and so on, and the short-term issues related to domestic demand in particular, especially private investment and household consumption, have not been doing well at all. So the economy does seem to be relying on exports to a significant extent, and we are seeing the production side, which was holding up reasonably well until a few months ago, also beginning to weaken. So I wouldn't quite say the Chinese economy is in very dire straits yet, but it's getting there. And the one concern I have is that there hasn't been very much stimulus, and the longer the Chinese government waits to infuse monetary stimulus in particular, but even fiscal stimulus, that stimulus is going to be a lot less effective in supporting the economy's growth. At a time of declining business and household confidence, using monetary policy requires fairly significant action. It also requires early action, and we haven't seen either of those from the Chinese government. But of course, you need more than macroeconomic stimulus. You need broader reform measures to revive confidence. But at the minimum, you do need support from both monetary and fiscal policy, and it's been quite minimal so far relative to where the economy is in. So I think there are good reasons to be concerned about the trajectory of the Chinese economy in the coming months of the year.
Thus the urgency then, Eswar. I mean, what do you think that stimulus could look like in the second half of the year in order for China to achieve that around 5%? I know you say arguably it might be a little bit too late as far as limiting the effectiveness, but in your view, what do you think could come next?
It's consistently being my view that using just one of the policy tools in isolation is not going to be enough. It is going to require a combination of tools. Now, with monetary policy, the good thing for China is that there is going to be a little more room for maneuver because we are likely to see a Fed rate cut this week and perhaps more to come this year. So this gives them a little more, the People's Bank of China, a little more room to cut interest rates and loosen credit conditions more broadly without fearing a significant depreciation of the yuan. But monetary policy by itself is not going to be very effective. I mean, providing cheaper money, more credit is not that helpful when businesses don't want to invest, when households don't want to consume. Now, fiscal policy could be much more supportive of small and medium-sized businesses and also households if it is targeted the right way. But ultimately, I think this is going to require some broader measures to supplement both fiscal and monetary policy, some measures to induce confidence that the government knows what it needs to do to right the economy, that it is going to support private enterprise, and that it is going to put in place some broader reforms, fiscal, labor market, and so on, that are necessary to revive growth.